Hi, it's JR again. So, I do want to give some background details of the specifics, but even before I get into that, I do want to also show that there are quite a few videos that I found across the last several years regarding the foreign earned income exclusion. So you can find lots of videos that are from other people. This one's only 3 minutes long, so maybe that's a good one to start with. Here's a 3 minute long one from this lawyer. You'll find videos from CPAs, from lawyers. Here's a detailed video, quite long. What is this? 17 minutes of actually filling out this form as it relates to excluding foreign income from your taxes for IRS. Another video. So there's a lot of videos by people who are professionals, whether lawyers or CPAs, on this topic that have been working with this policy or method for many years. I am not any of those type of people. I'm somebody interested in this policy, so I'm just showing you my own research really here. So how to qualify in general. Let's look at the IRS's webpage here regarding the foreign earned income exclusion. I guess I'll preview real quick. We're going to go over how to qualify in general. We'll talk about a couple different cases of how to qualify. There's at least 2 ways to qualify. We'll talk about a few qualifying nations, or mention a few of them. We'll talk about the form itself, and we'll talk about the potential savings available. Actually, I'm going to go ahead and talk a little bit more about that, because it's, how important is this before we get into the details of it. 22,000 plus per year for adult, meaning if you have a married couple, it would be double that. So $45,000 of savings per year for the married couple filing jointly, if they're both U.S. citizens. And that's just federal income tax savings, IRS. If you have a high U.S. tax, a high tax U.S. state, such as California or New York, your total savings wouldn't be limited to 45,000. You'd save another 5 or even 10,000 per year, 50,000, 55,000 per year for that married couple. If you put that across 10 years, it's over $500,000. If you do that for 20 people, whether it's married couples or individual people, across 10 years, we're talking about over $5 million in savings available. So that's all based on this figure. We'll come back to how I got that figure, but I did want to jump ahead to get into the bigger picture of the longer term. And as we have a lot of people involved, this is a lot of money saved that a company, say it's one company, and they were going to be paying 20 people, they could pay 20 people that $5 million instead of paying that money to the IRS. So that is a pretty big difference for an individual company. I am an employer, not a large employer, but I am an employer of people. So that's in addition to saving money for myself on my taxes. I'm interested in methods that simplify the tax reporting and save money on taxes for U.S. citizens that work for me. So let's go ahead to how to qualify in general. Here's the whole. You can just type 2023 FEIE and find the IRS's page on that topic. This is the page. It's a changing dollar amount across different calendar years as far as how much savings is available. So for 2023, it's gone up quite a bit, from 112,000 per person to 120,000 per person for calendar year 2023. Here's one of the pages describing this. A U.S. citizen who is a bona fide resident. We'll have to detail what the legal definition of that is a little later, but that's one of the ways to qualify that I'm going to talk about the most. You can also be physically present in a specific foreign country for at least 330 full days. That's a different way to qualify. Let's see. Here's the amount that we already mentioned for 2023. This isn't the only deduction, but I'm not going to get into the foreign housing deduction. The foreign housing deduction is something I'm not that familiar with. First, what is foreign earned income? and what is not foreign earned income. What is a foreign tax home? These are things that you can read on your own. I've read other pages, I guess some of these pages right here that are linked, where it describes someone who lives in France but works for a company based in New York. I remember this, this example. Anyway, there are examples here. I don't see the one for France that I remember reading before, but you have to be in a foreign country. You have to be an employee of a U.S. company receiving U.S. income or income from a U.S. company. That's really it. You know, I'm not going to get into the details of all of the rules here. Jump back to my main thing. So as little as 163 days per year. So I want to comment on that because the Bahamas is one of the most favorable places for implementing this this rule, and that's because they make it real easy to qualify as a legal tax resident of that country. It's not the same rules in every other foreign country. So you've got to consider there's the IRS rules. You also have to fulfill the rules of whatever foreign country in order to be a legal resident there, as well as to not have any taxes due there. In the case of the Bahamas, there are no income taxes. You can make, you know, $600 million a year in the Bahamas and they won't tax you for any of it because they don't have income tax. Other places it's a little different. So just really going to bring up the topic that it's different rules in different countries. Bahamas is one of the simplest rules. Belize actually has pretty simple rules for having tax residency there from my initial reading. Let's talk about a few of the other countries just to list them real quick. Where's my map of the Caribbean? Here it is. So in addition to Bermuda, we've got the Bahamas that's only like a 55-minute flight from Florida. We've got Costa Rica, a 2.5-hour flight from Florida, Panama, Nicaragua, Honduras, Belize, Guatemala. All of those are qualifying nations. Jamaica is not. Puerto Rico is part of the U.S. It's not. British Virgin Islands is a qualifying nation. No income tax there. Cayman Islands is a qualifying nation. So many of these places, English is the normal official language there. The Bahamas, Cayman Islands, British Virgin Islands, those are all, Belize and Panama, those are all English-speaking countries. In Costa Rica, it's primarily a Spanish-speaking country, like a lot of these right here, and they have a rule called territorial tax, which means that a U.S. citizen working for a U.S. company in those locations pays no taxes to those countries. That is the general rule. My wife's actually a dual citizen of Costa Rica, so for dual citizens, there may be slightly different rules. But from the IRS's perspective, you are clear. You get $120,000 per adult exempt or excluded. What IRS form to use? So here's the form itself, form 2555. Here's the link to it. You just fill out your identifying information. You put here that your employer is a U.S. company, if that's the case. There are some details here that you would report as far as when you were president in the United States or any of its possessions, such as Puerto Rico or U.S. Virgin Islands. This is an important one. Are you required to pay income tax in the place where you live? So for a country like the Bahamas that doesn't have income tax, you'll want to really closely read the instructions for how to fill out that form. I'll just say it that way. If your employer sends you back to the U.S. Throughout the year, that's fine. You can go visit your vendors, your suppliers, your plants, your locations within the U.S. or within Mexico, etc. That doesn't exclude you. That doesn't disqualify you as long as you're not as long as you stay within those countries for a limited amount of time. I believe it's 3 months. It's not 162 days. I think again, this partly depends on whether you're in the Bahamas or in Costa Rica or whatever as your tax residency. They're going to have limits on how long you can be in other places. So you maybe can go to the U.S. for 80 days in that calendar year, and to Mexico for 60 days in that calendar year for vacation and for work and so on. But you couldn't. It's possible that you wouldn't qualify if you're in the U.S. for 100 days. Some countries, after 90 days, they're no longer going to consider you a tax residency of that place if you're in the U.S. for 90 days or more. So you've got to be in that place for a minimum amount of time and not in any other one country for an excessive amount of time, whatever that limit is. And I believe it's 90 days. Let's see. So I went through over some qualifying nations real quick. I was just going to show 2 hours and 46 minutes is the flight time from Fort Lauderdale to San Jose or back and forth. For the Bahamas, it's actually like 54 minutes. It depends on the individual flight and how fast the wind is blowing. But an hour nonstop from Bahamas, Nassau to Fort Lauderdale, Florida. What else? Total savings available. We really went over that already. I didn't go over how I calculated that, so let me do that real quick. I looked up tax table. I spelled that wrong. Tax table 2023, and I had in mind $120,000. So we find the tax table here. This is nerdwallet.com. There's lots of other places that'll give you the tax table. That's where the link I happened to click. Hope I didn't just mess that up. Yep. Now I have to. There we go. So for over 89,000 up to 120,000, you would get 15,000 off your federal taxes plus another chunk. What is that chunk? It's this 24% of that amount. That 30. It's about 31,000. That's from 81 up to 120 is 31,000. So we got the 15,000 off. We got the 7,400 off. We add those together. We get 22 plus 1,000. So that really covers it. That's where I got this number. You can double that for two people if it's a married couple filing jointly. And I encourage you to look at other videos from accountants and from lawyers if you're specifically interested for yourself. You can look at their websites as well as their videos and save a gob of money across the next year or 10 years. Just to repeat again, when you submit this form, this is the instruction to your employer, the authorization to your employer to no longer withhold money from your paycheck or to greatly decrease the amount of money withheld from your paycheck. If you say you're making $20,000 a month, you're only going to save $2,000 if you're an individual without a married couple. Is my point. So there's a significant immediate savings available in your future paychecks as far as the amount of withholding that would no longer be withheld and would go directly to you, direct deposit or whatever method you get your paycheck. All right, well, I hope you found that somewhat informative and interesting, and we'll continue to search that further and take advantage of it. As a background note, there are many methods that are extremely favorable for people to improve their finances or improve their health that are not going to be widely publicized. Naturally, the IRS doesn't go around and put a huge budget into publicizing this method for people to pay them a lot less money legally. You would need to talk to somebody interested in the topic or very educated in the topic. It's possible that not every CPA is familiar with this. Not every tax lawyer may be familiar with this. I don't know how long this policy has been around, but it's been around several years at least. I don't know why the policy exists. But I did want to emphasize that this is one of many ways to greatly improve your finances that I have researched and explored and am implementing or planning to implement. So this is just an introduction to a whole network of topics, really, a whole set of topics. Besides things to improve your finances, I'll make a short note that many methods to improve health are not widely publicized. The typical medical doctor in the U.S. would not be aware of them because they're not publicized to the doctors. If they're not publicized to doctors, then the doctors don't know. It could be because they were developed 2 years ago or 40 years ago and just haven't gotten publicized to the doctors. So I like to add that note because with the extra $2,000 a month that you would save in IRS taxes, you might be able to find very affordable health practices that are dramatically going to improve your quality of life. So improving your budget, improving your finances is a nice thing. Improving your quality of life dramatically, that's a big deal. Thanks for your interest.